Hello traders, welcome to your daily technical market update for Wednesday the 4th of March 2015, and we've seen the reaction of the market with the RBA rates, and we've seen a boost in the Australian dollar as we spoke about yesterday. But however, the market is now looking forward to tomorrow's ECB meeting and the Bank of England's meeting, but also the non-farm payrolls on Friday. So these three key events is potentially going to send the market into a consolidation phase, as we're all waiting to see the outcome of those, where we'll look at any indications on any change or indications on when the UK expect to raise their rates. And if it is still on the table for this year, that will help boost the pound. And the ECB is also being watched heavily for any indications on whether the impacts of lately with Greece are going to signal any condition changes in the Eurozone. The Eurozone's data lately has been coming out quite stable. I wouldn't say it's spectacular, but it's stable, and that's the first step, at least, in the right direction. So the market is noting that the data has been somewhat stable, but now we're looking for the ECB to provide its thoughts and its direction moving forward as to whether they believe that they are moving to a more hawkish opinion of things and say, look, things aren't as bad as what we thought, and the stimulus and the work that we've been doing is having some effect. If we do get that, I do believe we will get a bounce in the euro as well. Now, following that, we have on Friday the non-farm payrolls. We have some data coming out of the US prior to the non-farm payrolls, and that'll help paint a picture on what we can expect from the non-farm payroll data. But I think the US dollar strength story has been one that's continued quite consistently. As I mentioned in the economic calendar, if we bring across this page again, we've had a very strong grind higher in the US dollar index, and we had a consolidation phase here, which has been broken out of last Thursday. And then since then, we've just sort of drifted higher. The MACD's crossed up, and we're starting to see the relative strength index bounce off the 50 level. So we could be looking for the US dollar to move to its next level highs as well, should we see a very strong US data. But the US data of late hasn't been impressive, so I wouldn't be surprised if we get a shock to the downside in that the non-farm payrolls doesn't quite meet expectations. I'll talk more about that over the next few days as I start to see some data and I can piece together my opinions on what I think the non-farm payroll report will come out as, and we'll look at trading opportunities then. So let's look forward to today, and as you can see, the New Zealand had a little bit of a bounce. This is on the 4-hourly chart, and that's purely due to we had another good dairy auction, and that's going to help the New Zealand economy with cash flow and the farmers and GDP all putting money in their pockets. So that's a good thing, and it's helped boost it. So we didn't actually break the 75-cent range. That is the most significant support for now, and if we do get a very strong non-farm payroll and that level breaks, there is a trading opportunity to be had. Likewise, if I don't think that the New Zealand between now and Friday is going to break above the 76-cent range. It may test 76 here, but I don't think it's going to break this level, and we could get a breakout there. If I go to the daily chart, as you can see, we had this triangle here. This is a fib 38.2. I've been mentioning it. It's a very strong level. Now, if broken very convincingly through the non-farm payroll, well, then you could say that the downtrend has been and gone. We've established a bottom here, and we could be looking for new highs. Likewise, we're in this zone of consolidation, so we need to be quite patient, and we need to look for any clues of where we're going to break out of either side of this consolidation area here. If you try and trade it, you can chop up your account pretty quickly, as it just oscillates back and forth and you go from profit to loss real quick. The Australian dollar's in a very similar situation. We had the bounce from the RBA's, the daily chart, not cutting rates, and we could be coming up and consolidating and testing this downtrend line that's been here for some time. Now, once again, if we do get some Australian GDP figures come out, it was quite flat, and as you can see, the market really went nowhere. Got a little excited and finished up where it started. And we're still at just above 78 cents. We could be looking just for a consolidation and then a breakout Friday of the highs over here, or this support here that everybody's watching as well. So there are two key levels that everybody's watching And this consolidation here should continue until Friday, and then we could get a breakout either side. We just need to look and try to get a picture of the long-term view. So I don't see any trading opportunities there either, unless you want to do some scalping on the ultra short term. But for the purpose of this video, I'm just going to try to give you guys some longer term, medium term trend trading opportunities. Now, the Great British Pound we spoke about broke out of this rising wedge and it's continued to drift lower. And as we can zoom in here, I'll get a 1 hourly chart. We just keep grinding lower, and grinding lower. The new lows again today. Now, this could continue should we get some weak data coming out from the UK tonight. So, as I mentioned, we do have the PMI services coming out for the UK, and if it comes out weak, this could continue lower. But this is a strong level of support, and I wouldn't be surprised if the breakout of this wedge is simply a pullback of a longer term rising. So we've had a big rally, and then we start to pull back to this very strong level of support, resistance, and then we get a bounce and continue north. The UK economy is doing quite well. So the PMI services may come in flat, and we may not see much of a reaction. And then tomorrow, we have the Bank of England's minutes coming out and their policy. And if we start to get an indication that they're quite happy to look at raising it sometime this year, that could definitely start the rally again for the UK, for the pound, and we get some support off these levels here. So that's something to keep in mind, and I don't have a trade for you on that either. We need to be very mindful that there's times to trade and there's times to be patient, stalking trades like we're doing now. We're piecing together the fundamental aspects of what could happen, the longer term technicals and trends, and we're trying to find some entries there to pick up a couple of hundred pips. I'd rather wait and get on a really good trend than try and churn the account out and lose some money along the way. The Euro's been quite bearish. I spoke about this double top here after we had a big fall, and then it's consolidated. We had this 4 hourly significant hammer here, which also indicates the continued slide. So definitely very weak looking. The charts, the technicals, everything's very bearish. You can't deny that. The next support here is at $1.11, and whether it tests it or not, we'll have a look. Tonight's PMI data coming out of the Euro, if overall as a consensus it's weak, well then we could see a continued slide of this, and we could take out these lows, and there's potentially a trading opportunity there. So that's one to keep an eye on. And then if it does break this, well then you wouldn't be too unrealistic to look to take profit down in here before it gets down to the historical support levels. Once again, soon as the US session kicks in, we could get some US strength, and that could help push it down to there. But then don't forget Friday non-farm payroll, so we'll have to see what happens there. If it comes in really weak, and the ECB tomorrow, talk about how that they could be quite happy and impressed with how things have started to stabilise, well then we could see a bounce, and then that would form a double bottom over here. It's just something that I'm keeping an eye on, just purely on the fundamentals, because I've noticed that the fundamentals aren't getting worse and worse, and we've had a massive decline. If I go to a weekly chart, look at this decline in the Euro, and this is based on basically Euro coming to an end, and the data's pointing to it's not coming to, it's not as bad as what the price action is telling us. So there's good reason to believe that we could have a short covering rally at some point, and the ECB combined with the non-farm payrolls could be just the ticket to take out this level here and continue higher. So we'll wait and see how that all pans out, and it's just definitely something to keep in mind. But in the short term, if we get some weak data tonight, there might be a breakout trade of just the support level there, pick up a couple of pips, 10, 15, 20, get out, and just be happy that you've banked some money. The CAD consolidation still, and it's not surprising, but we do have a very important announcement that could lead to the breakout of this pattern right here, and that is the Bank of Canada's rate decision, but more importantly their statement, because the rate decision is expected to be on hold, and the statement could be that they are going to leave it on hold for longer, and then we could get a breakout to the downside. Or they could say, like the RBA, we've kept it on hold just to see what the current measures and impacts are going to have, but in the future we could look to cut. and it could have the same reaction as the Australian dollar, and we could get a as the Australian dollar, and we could get a boost in the Canadian dollar, and that could push it lower. Like I said previously, it was we would get a breakout to the upside, not the downside, should we get some Canadian weakness. Also, the non-farm payrolls will kick in, and that could also cause the breakout as well if the Bank of Canada doesn't have anything new to say. So it's just something to keep in mind. But this breakout pattern is something that I'm stalking, and I've got to be patient with, because if I try and preempt it, we'll end up getting caught. And we're still on this grind higher on the US JAP, but we've had a pullback last night. And if I go to a 4-hourly chart, we took profit here as per my tweet, and I haven't got back in yet. And we'll wait and see what happens. I've got some data coming out tonight, and it very well could continue the trend of weak data that we've seen coming out of the US. Not weak, but just not as impressive as everybody expects, and that could continue the slide. If I look at the daily, this is an engulfing bear pattern, and it does mean that momentum shifted. So with trends grinded up higher, and then all of a sudden it's been rejected on the spot and then engulfed the previous day. So momentum has shifted, and I wouldn't be surprised if it does grind back down into here prior to non-farm payrolls. So I'm not probably looking to go north on it tonight. Well, there's the charts, there's the majors. Keep an eye on the data. As I said, you've got to know when to trade and know when to stay out. Keep an eye on all those patterns that I've mentioned, and hopefully we can find some trading opportunities. And don't give back any pips that you've made this week to the market. That's the key. Until tomorrow, trade well.